For each cost accumulation system identified, job order costing, process costing, activity-based costing, life cycle costing, the candidate should be able to a. Define the nature of the system, understand the cost flows of the system, and identify its appropriate use. b. Calculate inventory values and cost of goods sold. c. Demonstrate an understanding of the proper accounting for normal and abnormal spoilage. d. Discuss the strategic value of cost information regarding products and services. Each costing system is addressed according to the CMA learning outcomes. Job order costing. A. Nature and appropriate use. Job order costing is used for custom or unique products or services where each job is different. Costs are accumulated by job. b. Calculating inventory values and cost of goods sold. Costs are traced to specific jobs. The sum of job costs gives the total cost of goods sold. c. Accounting for spoilage. Normal spoilage is considered a part of production. Abnormal spoilage is recorded as a loss. d. Strategic value. Helps in pricing custom orders accurately, allocating overhead more precisely, and providing insights into product profitability. e. Benefits and limitations. Benefits include accurate cost allocation for custom jobs. Limitations include complexity and challenges in overhead allocation. f. Equivalent units in process costing. Not applicable to job order costing. g. Elements of activity-based costing. Not applicable to job order costing. h. Using activity-based costing in service firms. Job order costing is often not used in service firms. I. Concept of life cycle costing. Not specifically tied to job order costing. Process costing. A. Nature and appropriate use. Process costing is used when products are produced in large quantities with similar characteristics. Costs are averaged across all units. b. Calculating inventory values and cost of goods sold. Costs are accumulated in process accounts and spread over units produced. c. Accounting for spoilage. Normal and abnormal spoilage costs are allocated to all units. d. Strategic value. Helps assess production efficiency, cost control, and cost management in high-volume production. e. Benefits and limitations. Benefits include cost averaging for homogeneous products. Limitations include potential inaccuracies due to averaging. f. Equivalent units in process costing. Equivalent units represent partially completed units in process. g. Elements of activity-based costing. Not applicable to process costing. h. Using activity-based costing in service firms. Process costing is not commonly used in service firms. I. Concept of life cycle costing. Not specifically tied to process costing. Activity-based costing, ABC. A. Nature and appropriate use. ABC assigns costs based on activities and cost drivers. Used when overhead allocation based on volume is inaccurate. B. Calculating inventory values and cost of goods sold. Costs are assigned based on activities and their drivers. C. Accounting for spoilage. Depends on the context, but ABC is more about overhead allocation. D. Strategic value. Provides more accurate product costing, helps pricing decisions, and improves cost management. E. Benefits and limitations. Benefits include accurate cost allocation. Limitations include complexity and resource-intensive implementation. F. Equivalent units in process costing. Not applicable to ABC. G. Elements of activity-based costing. Cost pool, group of costs, cost driver, cause of cost, resource driver, cause of resource costs, activity driver, cause of activity costs. H. Using activity-based costing in service firms. ABC can help identify resource costs in service processes. I. Concept of life cycle costing, not specifically tied to ABC. Life cycle costing. A. Nature and appropriate use. Life cycle costing considers costs over a product's entire life, from development to disposal. Used for products with significant life cycle costs. B. Calculating inventory values and cost of goods sold. Considers costs at each stage of the product's life. C. Accounting for spoilage. Depends on the context, but life cycle costing considers long-term costs. D. Strategic value. Helps in decision-making for product development, pricing, and evaluating long-term profitability. E. Benefits and limitations. Benefits include a comprehensive view of costs. Limitations include challenges in estimating long-term costs accurately. F. Equivalent units in process costing, not applicable to life cycle costing. G. Elements of activity-based costing, not applicable to life cycle costing. H. Using activity-based costing in service firms, not specifically tied to life cycle costing. I. Concept of life cycle costing includes upfront, manufacturing, and downstream costs for a holistic cost view.